Let's continue to talk about the big picture here. Joe Hegener is with me, CIO of Asterazoa Capital. Thank you so much for being here.
Yeah.
Some of your thoughts on what's going on here in the big picture.
I think today in particular with the release of the inflation report, right, the market's eyes wide open to the fact that we're starting to see some inflation trickle into the market as a function of tariffs. And to what degree are companies going to be able to eat the increase in capex, and what percentage is going to be passed through to consumers. So we're starting to see that, and there's a little bit of a worry that if goods inflation does continue to decline as tariffs get implemented over time, that could create a lot of disruption within short term, the front end rates as it relates to the Fed potentially pausing for longer than expected in terms of interest rate cuts. And then also, I couple that with the long end of the curve, which is much more of a function of the big, beautiful bill and fiscal spending and fiscal indebtedness, not just in the United States, but in Japan and the Eurozone. We're seeing the long-term interest rates climbing substantially today, and we think that that trend continues.
Yeah, I definitely want to get the global story in here. Right here, we're talking about Asia withdrawing. I just finished reading that. That was $52 billion out of BlackRock, out of the index funds. That's huge. Mm-hmm. There was concern that Japan would sell U.S. bonds. Yeah. Right? Is there a theme happening here or not? Are we just creating a theme in our minds that we're worried about?
Yeah, it's a really good point, especially as it relates to Japan, right? So Japan, those large institutions over there have been the largest buyer of U.S. Treasuries for some time, for decades now. And a big portion of that is something called like the carry trade, right? The interest rates in Japan were zero for so long that it made sense for them to buy U.S. Treasuries and then pay the cost to hedge the foreign exchange from yen to US dollars. But now that the long-term interest rates locally in Japan are in excess of 3%, and actually some of the off-the-run stuff's closer to 5%, they can match their liabilities. The insurance companies can actually buy locally denominated Japanese bonds. They don't need to do this carry trade anymore. And the largest potential buyer of US Treasuries on a going forward basis is, we think, not going to be showing up in the degree or at the heft to which they have previously, which leaves a supply-demand mismatch.
It's okay, but the worst could happen, or that we could sort of take it in stride. Are we more likely to take it in stride, or this could be really bad news?
I think base case is that we take it in stride. There's always going to be a buyer for long denominated U.S. Treasuries. I do think that we have a little bit of a setup currently where we could see long-term yields potentially rise by 50 to 150 basis points in the next 12 months.
Right.
And that could create a major disruption in risk assets, particularly the S&P 500 and valuations.
Let's get to Nvidia and Bitcoin and crypto and all kinds of good things there, because this is what everybody really wants to hear. They want your advice.
Oh, gosh.
Nvidia, people were saying, I missed it. They had such FOMO. And even if they got into it, a short time ago, they still made money. Is there still room to run on a name like Nvidia, which is at $171 today and hitting all-time highs pretty much?
Oh, my goodness. I think the advice that I would give there is just sizing of risk. I remember a time early on in my professional career where Nvidia and AMD traded at 8 times earnings. At the end of the day, right, they've diversified out. They have a software business in Nvidia, but at the end of the day, the majority of their business is hardware. And at some point, I do believe that becomes that's a commodity, and it's not necessarily deserving of a 30 or a 50 times multiple. I still think we're in some of the mid-range or mid-innings of Nvidia's growth story. So, own it the way you would own any other passive investment, but I definitely would not be loading up or, buying extreme dips or anything along those lines.
Understood. So you're not jumping in here at 170 and buying Nvidia. No. When would you buy Nvidia?
I would buy Nvidia when it was...
Say maybe on a pullback or whatever. When's a good time to buy Nvidia?
I would say if the trailing 12-month earnings got below 20 times is when I would start to look at that.
Okay. So watch for that as far as we look at the values there. How about Bitcoin, which crossed 123,000 on my last check? That was the record intraday high. It's pretty amazing. Mm-hmm. Some of your thoughts there. When is it time to buy Bitcoin, and how high can it go?
Well, Bitcoin is interesting. I think it's very bimodal, right? It's either worth nothing or it's going to be worth a heck of a lot more. than what it's currently worth. And so I do think it's somewhat irresponsible to not have a little bit. And you obviously consult your financial advisor.
Irresponsible to not have a little bit.
It might be 2%, maybe 5% of your overall portfolio. Nothing major to where if it goes to zero, you're not going to lose sleep necessarily. But if it does become this phenomena that some people are claiming it might be, then you're going to participate in that in a substantial way. It's a very asymmetric opportunity, and if it does become real, it could be worth multiples of where it is now.
I mean, we've seen Ethereum moving higher, XRP moving up. Is this something, would you say, do the Bitcoin, buy Bitcoin, or somehow get exposure to Bitcoin, or have more crypto or different types of crypto?
Yeah, I'm far from an expert as it relates to various blockchain technologies and the pros and cons of the one thing I do like about Bitcoin in particular is just it has the critical mass in terms of adoption.
Right.
I do think that some of these new protocols are much more efficient, much more interesting and practical in terms of actual implementation into our economy. However, I think most experts would agree that it's way too early to know who the winners are going to be, and you're better off with the bellwether.
And then with the Mag 7, I mean, we talked about Nvidia. You wouldn't buy it here. Maybe when you said it when it's below 20 times trailing earnings, then you're going for that. What about any of the other Mag 7 names or Netflix? We're going to hear from Netflix later this week. Are any of those names interesting to you that you look to buy them, or are you really gung-ho on holding them for the long term?
So as it relates to particularly Mag 7 and most large cap equities, Netflix or a singular earnings report might create a short-term disruption, but if you're a long-term investor, I do believe that large cap equities are a function of flows and liquidity in the system. So as long as there are net buyers buying the S&P 500 via our 401k system and the retirement system that's very strong in this country, and there's GDP growth, there's always going to be net passive flows that create support, buy-side support for Mag 7, which is about 20-something% of the S&P 500. As long as that liquidity keeps pouring into the system, then there are really, really good long-term prospects for those Mag 7 names. Interestingly, though, for the first time in like 10 years, that buy function as it relates to passive flows, I mean, you just announced BlackRock just lost $52 billion in their passive funds. They're starting to taper in terms of passive flows entering the marketplace, and that's something that we're watching very closely, because if those flows start to reverse, or if people are start to sell their retirement holdings to pay for their credit card bills or their auto loans, things along those lines, then that could actually lead to a pretty large deleveraging in our view, and the valuations of the Mag 7 names could mean revert. Right, we're very elevated relative to history.
All right. It's great to see you, Joe Hegener, CIO, Asterazoa Capital. Thank you so much for being with us.